Here's the reality that changes everything. Kaspa has zero pre-mine, zero venture capital allocations, and zero tokens sitting in founder wallets waiting to obliterate your position. Every single KAS coin in circulation was mined or purchased on open exchanges. Skibum Trading, who's tracked proof-of-work networks since 2017, calls this the only fair gate in crypto, and he's not exaggerating. Let me paint the picture most investors miss. When you buy into projects backed by venture capital, you're not just competing with other retail traders. You're entering a rigged game where insiders hold massive allocations at pennies on the dollar, waiting for their unlock dates to cash out into your buy orders. Kaspa eliminates this structural disadvantage entirely. This isn't theoretical, it's measurable. Kaspa price movements from 2023 to 2025 show something unusual: resilience during bear markets that crushes most altcoins. While tokens with heavy insider allocations experienced 80–90% drawdowns as unlock schedules hit, KAS maintained relative strength. Why? Because there's no supply bomb waiting to detonate, no venture fund dumping millions of tokens to meet quarterly redemption requests. Skibum Trading tracked this phenomenon personally. He watched KAS climb from 0.05 in early 2023 to 0.07 by 2025, a 14x move that happened without exchange listings on major platforms, without celebrity endorsements, without the marketing machine that props up projects you see advertised everywhere. That type of organic growth reveals something critical: genuine demand, overwhelming natural mining supply. The implication? Kaspa price discovery reflects actual market forces rather than financial engineering. When KAS moves up, it's buyers overpowering miners. When it consolidates, it's equilibrium, not insider manipulation. This creates a completely different risk profile than 99% of altcoins, where your investment timeline depends on tracking unlock schedules like a part-time forensic accountant. Now, let's address what makes analysts like DC call Kaspa the biggest phenomenon since 2017. He's not talking about price action. He's talking about something blockchain developers claimed was impossible: solving the trilemma without compromising decentralization. Here's what that means in practical terms. Bitcoin processes transactions slowly by design. Security through deliberate inefficiency. Ethereum tried to scale, but sacrificed decentralization in the process. Kaspa's block-DAG architecture produces blocks every single second while maintaining Bitcoin-level proof-of-work security. Let that sink in. 1-second confirmations with no validators, no staking committees, no backdoor centralization. The DAG-Knight upgrade makes this even more aggressive. We're looking at potential sub-second block times that could make Kaspa the fastest proof-of-work chain in existence, faster than most proof-of-stake networks, while keeping the security guarantees that made Bitcoin revolutionary. DC, who's analyzed proof-of-work systems for nearly a decade, positions Kaspa closer to Bitcoin philosophically than any other project claiming to be Bitcoin 2.0. The difference? Kaspa actually delivers scalability that makes daily transactions viable. You get the decentralization purists demand with the speed that real adoption requires. This is why overlooking Kaspa today mirrors the mistake investors made with Solana before its breakout. Not because they're similar technologically, they're not, but because both represented fundamental breakthroughs that most analysts initially dismissed as impossible or unnecessary. By the time consensus shifted, early positioning windows had closed. If this analysis is revealing market dynamics you haven't seen dissected anywhere else, you need to smash that like button right now and subscribe to TJ Crypto World. I publish these deep dive investigations daily, focusing on asymmetric opportunities that most creators won't touch because they're not paid to promote them. Your engagement tells me you're ready for analysis that goes beyond recycled talking points. Now let's expose the catalyst that could trigger Kaspa's next major revaluation. Here's the part that separates short-term traders from generational wealth builders. Kaspa's roadmap includes open-source Layer 2 development that could unlock entirely new demand categories. Think about how this changes the equation. Right now, KAS functions as a transfer of value network. Fast, cheap, secure proof-of-work transactions. But once Layer 2 infrastructure launches, Kaspa becomes the settlement layer for decentralized applications, DeFi protocols, and smart contract platforms. Here's the critical detail. KAS would serve as the gas token for these Layer 2 applications. Every transaction, every contract execution, every DeFi interaction would require KAS. This isn't speculation. It's how Layer 2 economics work. Look at Ethereum's fee burn mechanism after EIP 1559, or how Bitcoin's Lightning Network increases base layer demand. DC emphasizes that this catalyst hasn't been priced in because most investors don't understand Kaspa's architecture well enough to project forward. They see it as just another Bitcoin clone, rather than recognizing it as infrastructure capable of supporting the next generation of decentralized applications. The asymmetry becomes obvious when you compare valuations. Kaspa sits near $2 billion market cap, while projects with less innovative technology and worse tokenomics trade at 5x to 10x that valuation. Skibum Trading calls this the most asymmetric bet in proof of work, and the data supports his position. Add in the documented fact that some analysts have admitted being compensated to exclude Kaspa from comparison reports, and you start seeing why this opportunity remains mispriced. It's not that Kaspa lacks fundamentals, it's that deliberate gatekeeping has kept it off institutional radars. What separates Kaspa from projects riding hype cycles? Community conviction built through fair participation, rather than airdrop farming and pre-sale gambling. Without insider allocations waiting to unlock, KAS holders aren't constantly watching for exit liquidity traps. The mining community supports network security while creating predictable sell pressure that markets can absorb naturally. This builds stability that speculative tokens can never achieve. Skibum Trading's analysis shows this dynamic clearly. Kaspa's price resilience through bear markets significantly outperformed altcoins in similar market cap ranges. Projects with venture backing saw 85% plus drawdowns during 2023-2024 consolidation. KAS maintained relative strength because its supply dynamics aren't controlled by private investors prioritizing quarterly returns over long-term vision. This creates a holder base with completely different psychology. When you've mined KAS or bought it on open markets without insider advantages, your time horizon extends naturally. You're not constantly checking unlock schedules or watching for founder wallet movements. You're evaluating fundamentals, network growth, technical upgrades, adoption metrics. That difference might seem subtle, but it's everything when volatility hits. Communities built on fair participation weather storms that shatter communities built on airdrop speculation. Before we wrap this analysis, I want to make sure you're positioned for what's coming. Hit that subscribe button and activate notifications so you don't miss my upcoming breakdown on 3 proof-of-work projects institutional money is accumulating. That investigation directly complements today's Kaspa analysis and reveals other overlooked opportunities in the mining sector. Don't let algorithmic timing cost you positioning advantages. Subscribe now. I want to genuinely thank each of you for investing your time in this deep analysis. Your engagement and intelligent questions push me to deliver research that goes beyond surface-level repetition. Remember, the greatest returns aren't found chasing what's already trending. They're found recognizing structural advantages before consensus catches up. Kaspa represents that rare combination of technical innovation, fair distribution, and deliberate market undervaluation. This is TJ from TJ Crypto World, reminding you that asymmetric opportunities reward preparation, not speculation. Keep researching, keep positioning intelligently, and I'll see you in the next investigation where we continue exposing tomorrow's breakthrough projects today.